Imagine having $1 million plus in prop firm funding by the end of 2025. Sounds ambitious? Definitely. But achievable? Absolutely. If of course you have the right plan. In this video, I'm sharing the exact step-by-step plan I'll be using to hit 7 figures in funding this year and how you can do it as well. The first piece of the puzzle, a profitable strategy, because without it, none of this is achievable. That's why we are starting with the exact strategy that I'll be using, and more importantly, how you will be able to use it as well. I'll firstly explain it, and then I'll walk you through some real trade examples to show you exactly how it works in action. But that's just the foundation. You see, after that, I'll share the next steps that you will need to take in order to scale up your funding and hit that 7-figure goal. By the end of this video, you will have everything you need to make 2025 your best trading year. Let's get started. All right, now that we're on the chart, let me briefly explain you my strategy. So first thing that I do is I wait for the New York Stock Exchange to open. That's at 2:30 p.m. UK time. After that, I then go on the hourly time frame on the pairs that I trade, and I mark up my major liquidity levels. If let's say I will see something similar to this, I will mark up the upper liquidity level, which would be this high right here, and then the bottom liquidity level, which would be this low right here. These would be my major liquidity levels on the hourly time frame. After that, what I would wait for is either one of these levels to get taken out, okay? Let's say price from here heads lower and takes this liquidity level out. After that, what I do is I then go on the 5-minute time frame, all right? And on the 5-minute time frame, I am waiting for a bullish market structure shift in this case, okay? On the 5-minute, I will wait for something like this. A shift, then a retest of the fair value gap, and that's where I would enter the market, okay? So I would wait for a shift to the upside, and then I would enter on the fair value gap that was left behind, okay? I need a displacement, a aggressive displacement that leaves imbalance behind. If there's no imbalance, then there's no entry. And then I enter right on the fair value gap, stop loss below the low, and I target to RR. Don't worry, you'll get a much better understanding in the trade examples that I will go over, okay? And now, let me show you how a bearish scenario would look like. So once again, New York Stock Exchange opened. After that, I check the charts and I look for the liquidity levels. I mark the liquidity levels, and let's say the upper one will be taken out, okay? We have something like this. What I will do now is I will go on the 5-minute and I will look for a bearish market structure shift. Okay, I will look for something like this on the 5-minute time frame. Shift, enter on the fair value gap, and happy days. Okay, a shift right here. Then we need to have a fair value gap. We need to have a imbalance that was left behind, and we will enter right on the fair value gap. Stop loss above the high, and 2RR will be targeted. Okay, this is literally the strategy. Of course, there's more to it because we like to take those A+ setups, and I will talk about that in a second when I will show you guys 2 trades that I took. Both of them were high probability, and I will also tell you exactly why. All right, so right here is exactly when I opened the chart on that specific day. Bear in mind, I'm filming this video end of December, so that's why I'm talking about this trade here that played out in the 17th. And right here, I identified this as my bottom liquidity level, and as my upper liquidity level, I identified this one right here. We can see that this one was swept. The bottom liquidity level was swept, and then what I did is I went on the higher time frames. I went on the daily to see if I have a daily bias. And check this out. I do have a daily bias. Why? Because we are rejecting from a daily demand level. Prices in a daily demand level, we could expect it to head higher from here. Okay, because of that, I then marked that right here we had a daily demand level. I went back on the hourly time frame. I dragged this line here to make sure that I can see it, and then I went on the 4-hour time frame as well. On the 4-hour time frame, unfortunately, there was no confluence. The only confluence I would say was that price swept this liquidity level as well on the 4-hour, which was a decent confluence, I would say. So now that we have a daily confluence, I am going back on the 1-hour, and then I'm also going back on the 5-minute. And on the 5-minute, I then noted that this right here is a plus potential. Okay, a plus potential. Why? Because it has a higher time frame confluence as well. And because of that, I asked myself, okay, if I'm getting a beautiful market structure shift, by a beautiful market structure shift, I mean a aggressive displacement with imbalance behind, which was exactly what we got here. Beautiful shift right here, beautiful fair value gap. I am now looking to enter the market right on the fair value gap. Okay, let's play the price. Right here, the markets were entered with a buy position, stop loss below the low as we discussed, and then take profit 1 to 2. This was the exact trade I took, and it was a trade that I also sent in my community. And on that note, if you guys like this style of trading and you want to go more in depth on this exact strategy to then be able to take only these high probability setups and therefore capitalize on them and have a bigger win rate and of course pass the challenge easier, you should click the first link down below in my video description and apply for my mentoring program. Not only you will learn everything you need to know about how I trade, but you will also be able to trade with me one-on-one and achieve results like this, or like this, or like this, and many more. All right, so now let's play the price and see how this trade played out. It triggered, faced some drawdown, but then it went into profit. Let's go on the hourly time frame to play the price forward, and take profit was smashed right here for a very beautiful 2RR trade. Like I said, high probability, and I was also able to secure 2% with this exact trade on my prop firm account. All right, so the second trade example will be a sell. Again, a trade that I personally took as well as my mentoring people. Right here, I opened the chart and I saw that price swept this key level right here. Okay, it swept this high right here. I zoomed out, I saw it was approaching a supply level right here, which was a good confluence, okay? And then I marked my bottom liquidity level as well, which was this one. After that, what's the next step? I went on the higher time frames, firstly on the daily, and checked this out. Price was at a daily demand level, and then on the 4-hour, price was rejecting from a 4-hour supply level right here. We can see the price action is looking very beautiful. This was a major level on the 4-hour as well, so that's also a added confluence. And then what I did is I marked this 4-hour supply, 4-hour plus daily supply. And because of this, I knew that this could be a plus setup. I then went on the hourly time frame, I dragged it, and then I went on the 5-minute. And on the 5-minute, I knew that now I need to wait for a beautiful market structure shift, a aggressive displacement, a gap, and then I will enter right then and there. So let's play the price and see when we manage to get that. Okay, right here, check this out guys, okay? So we can see that price started to become bearish, and right here it gave us the shift. Okay, we have a market structure shift right here. We broke this low, we have this beautiful fair value gap right here, and then I wanted to enter on the fair value gap. Okay, let's see. Right here, it tapped me in. Right here, I entered the trade. Stop loss was above this high right here. And now we can see that I faced some drawdown, but I knew that this was a plus setup, and most likely it would be a winner, okay? Because like I said, these A+ setups have a better win rate, and we prefer to only focus on taking these setups because like I said, you will have a bigger win rate, and because of that, you will also be able to pass the challenge faster, get funded, get those payouts, and scale up. Basically what the goal is with this video, okay? So we are targeting 2RR, and now let's play the price. Right here I entered, and then price played a bit, went straight into profit, and smash the take profit right here. Now that you have learned a profitable strategy, you are ready for the next step, getting your prop firm challenge. Now a lot of you might be asking, what prop firm should I go for? And I personally currently work with Sabio Trade, hence why I would recommend you guys to check them out as well. Why this prop firm, you might ask? Well, they have one of the most accessible challenge fees, which is great, especially for new traders. They have a one-step challenge instead of a two-step, which means that you only need to pass one test in order to then get funded. On the father account, you can request instant withdrawals without having to wait for minimum trading days. You can scale up with them to a total of $2 million in total funding, and there's plenty of other benefits. If you want to learn more and if you're interested to sign up with them, click the second link down below in my video description and make sure you apply the code SMCDAN for a discount. Now that you know which prop firm you want to go for, the next step is for you to determine which account you will go for. By account, I mean account size. You know, there's different options. You have 25K accounts, you have 50K accounts, you have 100K accounts, you have 200K accounts. With Sabio Trade, for example, you even have a $650,000 account. Now, your job is to pick the account suitable for you. What do I mean by this? Well, for example, a 50K account is around $250. If you're okay with spending that amount and you're not afraid to lose it, then go ahead and get a 50K account. If, for example, $500 seems a big amount and you're not okay with spending that, then avoid going for the 100K challenge. What I'm trying to say here is that you should start with the challenge that you are comfortable with. Because I know these bigger numbers are very attractive, but they are also more expensive, and the last thing you want is you feeling pressure whilst you are trading. Because trust me, that right there is the recipe of failure. So ask yourself and be very honest, which of these accounts am I comfortable with? Then you will have your answer. Now, after you get the challenge, the next thing that you need to understand is that this is not a race. There is no time limit for you to pass the challenge. You can take 1 month, you can take 2 months, you can take as much time as you want in order to pass it. There is no need for you to rush. A lot of people have this wrong mindset where they go into a prop firm challenge and their goal is to pass it fast. No, your goal should be to pass it, not to pass it fast. And this brings me to the next thing, that is you applying proper risk management. Because if you understand that there's no rush for you to pass it fast, you also understand that you need to be conservative and apply proper risk management, okay? And not risk 3% per trade or 4% per trade or 5% per trade. No, in my opinion, you shouldn't risk more than 1% per trade. Ideally, it would be 0.5%. This is what I would recommend. But if you're comfortable with 1%, then stick to 1% and 1% only. Of course, depending on the setups, because this is something that I do, but this is more advanced. Depending on the setups, for example, when I have a A+ setup, a high probability setup, I tend to risk more in order to capitalize on that specific trade and make more profits, and therefore pass the challenge and get funded faster. But this is something that I would recommend you to do when you become a more experienced trader. Yes, I see many people that do this, but these people are people that, for example, were in my program, in my community for already a good while now. And of course, it becomes easy for them to avoid the setups that aren't high probability and only to focus and capitalize on the ones that are high probability. But back to what I was saying, 1% or 0.5% should be good to go. Pick one of them and then stick to it. After you determine your risk management plan, the next thing that you need to think about is your trading plan. You need to be as strict as possible with your trading plan. In my case, for example, I arrive at my trading desk at 2:30 p.m. UK time when the New York Stock Exchange opens. At 5 p.m. UK time, I am done for that specific day. So I only sit at the charts for a total of 2 hours and 30 minutes every single day. After that, I do something else. I go to the gym, I play tennis, I try to do something else to disconnect myself from the chart, and this is something that you need to do as well. After you establish what trading schedule you have, you know you trade between X and Z. For trading, do something, and after trading, do something as well. Why? Because like this, it's gonna be very easy for you to disconnect. And trust me, you need a very strict plan as well. Because without it, you will find yourself overtrading, you will find yourself FOMOing into trades that aren't there. So create a very strict schedule and trading plan. If you respected everything we've discussed about so far, congratulations, you now passed your prop firm challenge and now you are a funded trader. You received the live funded account and now you're about to start trading it. This next step right here is extremely crucial. This makes or breaks traders. And I know it might sound extremely simple, and at first glance you might say, oh, this is something easy, I have no struggles with it, but trust me, there will be a time where you will be tested, and I beg you to remember what I'm about to say now. As soon as you get funded, please do not change your trading plan, your trading schedule, your strategy. I know it sounds simple, but trust me, there is so many people that fall for this. They get funded, they get the live account, and then they get anxious because they are scared to trade the live funded account to not lose it, right? They have this pressure on themselves because now they know that they passed the challenge, they came so far, they spent all this time, all this effort for this moment right here, and then when they start trading the live funded account, they try to be too perfect about it. And because of that, what happens next? Well, they try to look for an added confluence to their strategy that could mess up their entire edge. They try to modify their trading plan, and in their head they think this is something good that they need to do in order to feel more safe, because we as human beings, we like to be safe and we like to control stuff. But we need to understand that we need to embrace the feeling of uncertainty when it comes to trading and remind yourself that this already worked. If you know that this trading plan, this strategy, this schedule brought you here, You were able to pass the challenge with it and get funded. Why would you change anything about it? Always think about this, because trust me, I know multiple traders that fell for this trap right here, and you don't want to fall for it. So please make sure you note this down somewhere to not forget it. If you made it so far, pat yourself on the back, because you should be ready now to get the account, pass it, and also trade the live funded account profitably to then be able to withdraw your first payout. Now, what you do after you request your first payout will determine how fast you will reach the 7-figure goal in funding. What I would personally recommend you, okay, let's say you got a 50K account. Say you qualified for a payout and your payout was, let's say, $1,000, which is doable on a 50K account, okay? That was your split, $1,000. That was your first ever withdrawal. With that $1,000, what I would recommend you to do is put $250 in your pocket, because that was most likely the challenge fee that you paid for the 50K challenge. And then with the rest, reinvest. With the rest, you could get a 100K account, which costs $500. Okay, you get a 100K account, you have a 50K and a 100K. After you pass the 100K, you can then merge them together and have a $150,000 account. Then on a $150,000 account, a 5% payout, that's around $7,000. You can see how now you are almost reaching that 5-figure mark in terms of payouts. And then with that payout, you can then go ahead and buy the biggest account size. You can buy the 200K challenge, or you can buy the $650,000 challenge, for example, with Sabio Trade. And then when you reach your goal, which is 7 figures in funding, you can literally aim to do 1 or 2% a month, and that will be a 5-figure payout. Okay, so you can see how powerful this can be and how scalable. It's literally rinse and repeat, and understanding that sky is the limit. And this right here is the best way to basically scale up from your already made profits. This, in my opinion, is the best way to do it. And on that note, I really hope you guys found this video valuable. If you did, make sure to drop a like and share it as well. And once again, if you're serious about trading and you truly want to make 2025 your best year and learn more about this strategy, about how to trade those high probability setups only and therefore get funded faster, and of course, if you also resonate with me and you would like to learn from me to trade with me, like I said, first link down below, you apply for the mentoring program. Until the next video, I would highly recommend you to watch the video that will pop on the screen right now. It's a video where I day traded in my car for a full day to see exactly how much money I can make.